Hi everyone, welcome to Timeline, where we look at the key developments in Sri Lanka over the past 7 days. My name is Roshan Ranasinghe. With me to discuss the key matters is Imran Furkan, economic analyst. Hi Imran,
Hi, Roshan. Good to be with you once again.
thank you for accepting our invitation. A key development this week in Sri Lanka is the debt restructuring process, where we received some initial information. Based on the details that have been outlined and going forward, particularly over the next 3 to 4 days, how are you saying the process play out?
Yeah, I think the process has been handled quite, with a lot of maturity, I would say, and quite smoothly compared to, the size of the challenge. Remember, about 68% of our, d- well above 60% of our debt is domestic debt, right? It denominated in rupees, governed by the laws of Sri Lanka. So because of that, absolutely, it has to be tackled as part of the IMF agreement. So when we defaulted in April last year, and then all the other events that followed, it was a very scary time because we had never defaulted before, right? And in 74 years of independence, we had never defaulted before. So it was a very scary period, and coming back into the international debt markets and borrowing again, one of the most important things is first was the IMF agreement, which came early this year. Now we are into an important aspect of that IMF agreement is the debt restructuring, make it more manageable for us. And the bigger part of the debt obviously is the domestic debt. And I think there is a plan now for how to restructure that. I think it's going to go through a bit of a process um, to get approved.
Noted, Imran. You touched on the domestic debt side of it, particularly being such a kind of in terms of values and quantum, it's pretty huge. And the government has been undertaking a lot of treasury debt via that scheme. How is that situation where we are borrowing more from treasury bill angle as opposed to treasury bonds? I mean, is that just kind of switching the two instruments? I mean, and accumulating more debt? What are your thoughts on that?
Yeah, uh, I think one of the main reasons for that has been the fact that the government really did get stuck in terms of their ability to raise a lot more longer term debt when they did the default, and also with in terms of the our rating downgrade. So I think going in for short term treasury bills made a lot of sense, because I think it reduced the risk for the those who are purchasing that debt. And I think that possibly was the right thing to do versus committing to much more longer term debt. And also we need to keep in mind that the short term interest rates are very, very high, going up well above 30% sometimes. So if they were to engage in a lot more longer term bond based borrowing, I think we would be stuck for a lot more higher interest costs going forward. So I think makes a lot of sense, because once the debt restructuring is done, and also inflation coming down, I think market interest rates should come down dramatically. And so having short-term instruments that can then be renewed at a much lower interest rate cost makes a lot of sense from an economic perspective.
Sure. That's interesting. I think one of the key areas that has been published is a reduction in the coupon rates of new bills to be offered, as well as maturity extensions. That's from the local debt perspective. How are you seeing it, Imran, for the international sovereign bond holders, with the domestic bond holders getting somewhat a lot of flexibility on the arrangement? How are you seeing them reacting, and how negotiations going forward?
Yeah, actually, there has not been. At least we haven't seen the debt, framework, domestic debt framework to really know. But there has been, I think, an intimation that there is going to be no haircut as such. So it's going to be maturity extensions, and obviously, some cuts in the coupon rate. So while that may seem unfair from an international perspective, you must keep in mind that Sri Lanka's inflation has been well above 50% for quite a long period of time, and also now it's progressively coming down to the 20s, and then it might even be single digit by the end of the year. So in a sense, the domestic, the rupee debt holders have actually taken a substantial haircut in many ways, right? Because the rupees that they hold are worth far, far less than before. But for the sovereign debt holders, obviously they are denominated in USD. That's the reserve currency of the world. It's actually to some extent depreciated slightly, would say, with the increase in the interest rates by the U.S. Federal Reserve over the period of time. So really, I mean, in terms of a nominal value, they really haven't seen much of a reduction. So they may accept it, but everything is down to the negotiations, and I think that's the critical aspect: how you negotiate with your, foreign debt holders.
Sounds good. Yes, I agree with you. The skills of negotiators will be put to the test here.
Yeah, but can I just add one
Well,
more thing, Ratan? In terms of external, I have been noticing a trend that many people are not being noticing, which is that in the recent past, particularly in the last maybe year or two, it's becoming increasingly obvious that some of the foreign debt holders for most countries are unwilling to take or even suggest haircuts. Because it's very interesting. In previous rounds of debt negotiations, renegotiations, I've seen, even private entities and or even governments are willing to take some sort of haircuts to bring about, some sort of debt sustainability for the countries. What's happening now is, one is because of the rise of China as a big sovereign debt holder, and also even in the other developed countries, because they themselves are in so much of debt, right? Except maybe possibly China, but they and also there is this pressure from the citizens of those countries as to why there needs to be a haircut for countries that are in bad fiscal state because of their own actions. So it's not going to be easy anymore as much as there has been before. Something I've been noticing recently, I think it's going to feature in our negotiations as well.
that's very interesting. To be clear, Imran, what you're saying is you have noticed a trend where foreign bondholders are not willing to take a haircut.
Exactly. They are much more reluctant than I would say than they were, say, in previous rounds of the negotiations. I'm not saying it's not going to happen for Sri Lanka.
Sure.
It depends on, on our negotiation, on our economic situation, on how quickly they want their money back. So many different things. I'm not saying it's going to not happen, but I don't think it's going to be as easy as people think it is to get a haircut. Maturity extensions, coupon cuts, possibly, but haircuts are becoming rare and rare, and I think something we need to keep in mind going forward when we manage our debts.
That's very interesting because that is, I think, haircut is something that we are almost inevitably going to suggest to these guys, I believe.
Absolutely, I think they're banking on it, to be honest with you, and I think they need to be careful, because I personally don't think that if you're getting any haircut, it's going to be minimal, and I think it will be difficult, not impossible, but difficult.
I take your point. Yes, from the Sri Lankan government's perspective, I think one of the conditions with the IMF is to reduce the debt servicing cost by about 17 billion over the next 5 years or so. Am I right? That will
Yes, yes, and I think that's where the negotiations need to happen. One of the things that they were considering, really, I think the former governor was suggesting that the central bank buy back some of these debts which were going at very low rates in terms of, in the market, but I don't think we have the foreign exchange to do that. I think one way of also doing to do this is also to look at growing your economy faster, so that then the debt servicing costs in terms of percentages and in terms of raw amounts will be a lot less and manageable. So I think negotiations are one part of the component of it, but also growing your economy so that the ability to pay back is a lot easier. I think so that's something they are banking on as well, I'd say.
Absolutely, I totally agree with you. Growing economy is kind of going to be one of the key metric to bringing down some of these conditions that the IMF has laid out in terms of 14% gross financing needs, where 4.5% of GDP to be the external debt financing needs, and so on. So as we grow the economy, some of these numbers will be manageable in absolute terms.
Absolutely. And also, I think we need to also keep in mind that the size of the public service for me, and also things like defense need to be really addressed, because there is absolutely no discussion around doing those. So far it's only been about raising revenue and particularly taxes. But I think we need to, the elephant in the room is the size of our public service, the size of our defense expenditure. Things like that need to be tackled head on as soon as this debt restructuring deal, is agreed.
I agree with you. Yes, I mean what you mentioned, Imran, kind of brings me nicely to the next section that I want to have a chat with you on, is the general health of the economy. And as you mentioned, the size of the public sector, the size of the public debt, some of these state-owned enterprise reforms. My question to you, Imran, is while we know what needs to be done, and we know we can understand the benefits of doing some of these changes, feel that they will be implemented given the political framework, even though it's an absolute necessity?
Very good question. Something I have been a little pessimistic on, to be honest with you. Look, the way I see it is we don't have much of a choice, right? Now, if you look at certain recent, debt renegotiations, etc., now countries like Suriname, for example, which defaulted, during this period between COVID and also, now, and then renegotiated the IMF and so on. Every country has a reason why the international community will get involved, right? Some have natural resources that people are interested in, geopolitical reasons, etc., etc., etc. Now, in our case, really, we don't have any natural resources. Yes, we are somewhat involved in a geopolitical game between, the West and India and China. So to some extent, that is helping us in our negotiations. Other than that, really, we don't have much choice, much in terms of bargaining power with anybody. So my view is we have not much of a choice in terms of doing these changes. Politically not palatable, but then we also need to look at how the political, how politics itself will unfold, right? If we were to have, presidential election and a parliamentary election in quick succession, say one in end of the year, it's in the president's election, and then parliament, say March next year, and we finish those two off, then I believe there is political space to undertake reforms. If we were to delay both of them, then both of them for next year when they are due, say for example, the presidential election is due in October, November 2024, parliamentary elections are due in 2025, then these changes will not happen. And I think that point, it's going to be very difficult to implement it. So it all also depends on how much political courage our politicians have. So far, what they've been doing is, they've been doing the low-hanging fruit, right? Increase taxes, freeze expenditure, limit imports. Sorry, easy things to do. But the difficult task, as you have outlined, is to be done, and I think we'll have to watch and see how much political courage there is going to be.
Sure. I take your point. One thought that comes to mind is when you're trying to reform some of the state-owned enterprises, being, of course, the labor force being a huge task. What are you going to do with some of these people that you want to let go? I mean, if it's 50,000, 100,000 people who are going to be unemployed, it'll be a VRS. I mean, what are the next steps as well? I think that's a conversation that needs to be had as well. Because as a result of COVID and the economic crisis, unemployment, even though it hasn't spiked significantly, I believe it's in the 5.5 range. But still, there'll be a kind of a social contract as well there, that some avenue of employment or some avenue of job opportunities has to be presented to these guys as well.
Absolutely. If not, you will have civil unrest, and we've had those coups, right? We've had these uprisings in 71, in 89. Then we've had the 30-year war. So we know that our civil society, and then obviously the Aragali of last year, our civil society will rise up if they are pushed too hard. So that's something to be kept in mind. But I think that the path to doing this is also to pick your battles, right? So something like, for example, restructuring CPC CEB is inevitable and should be done first, because of the amount of stress they cause on both the budget and also our foreign exchange situation, right? So that's what they tackle first. And secondly, they will look at Sri Lankan Airlines because of the historical losses and obviously, the drain that's going to happen, and then look at other more profitable entities as well. So I think you should also look at if you pick your battles carefully. I think you are able to move forward, and I think they know relatively what they're doing. But I think whether there is going to be the real political will, we'll have to see. I mean, Sri Lanka has not much of a choice, right? We have nothing to fall back on. We will default again if you don't, and then next time around, right, this kind of support that you saw from the international community, even India, even China, the West, everybody else, I don't think it's going to be forthcoming next time around, because they would be very aware that we had the opportunity to reform ourselves. We didn't do that, and we'll be, perceived as yet another Argentina that keeps on defaulting. So I think we'll be very, very careful. I think it'll be very difficult to kind of get the kind of goodwill. See, one of the things that also happened to us is that we had never defaulted, so they know globally that we were not doing it as a habit. That's number one. Number two, we were hit by some really unfortunate situations. One back to back to back, right? One is the actually starting from 2018 October. The whole constitutional crisis. I was overseas, and I can tell you that people ask me to my face, Sri Lanka has like two prime ministers now, and so while it may have escaped the consciousness of many people in Sri Lanka from an international perspective. It was a horrific kind of event, right? The constitutional crisis of October 2018, and that went on for about 3 to 4 months, followed immediately by the Easter Sunday attacks. Then you had the COVID. Then you had our default. So people are like, Sri Lanka's had a bad run. We need to give them a little bit of space. But from this point onwards, I don't think you're going to get that kind of sympathy. It's something people don't keep in mind, which I am very conscious of because I've dealt with international investors and donors and so on. They are very aware of what's happening in the country and have been for the last few
Sure,
years.
sure. Point taken. Absolutely. It's almost you say, anyway, this time, or there is no next time for us. Just speaking broadly on the health of the economy, public sector is one side of things. Looking at the private sector, Imran, with some of these import controls being loosened, is the kind of private sector engine kind of slowly gearing up for the recovery? How are you seeing that side of things?
Not yet, to be honest with you, for two reasons. Number one is the cost of financing is still very, very high. So in my conversations with those in the top echelons of the private sector, they are not looking at investing anytime soon for the simple reason that the cost of doing so is very, very high. So I think CBSL needs to work very fast to bring down this cost of borrowing. I think for businesses in particular, also for the individuals. The second component is actually about personal consumption, right? For investment to take place, there must be a discernible pickup in personal consumption. And again, I think purchasing power has declined substantially for a couple of reasons. Number one is obviously inflation. Number two is, again, high cost of borrowing, even personal borrowing, right? And the third one has been the reimposition of taxes, as required with the IMF agreement. So I think till there is a discernible pickup in personal consumption and the ability to consume, I personally don't think there's going to be massive investment by the private sector. So I think it'll take a bit of time. I'd say closer to the end of the year before you see things really taking off. Even the imports, I think, unless prices are brought down substantially to reflect, the appreciation of the rupee, I don't think consumption will pick up dramatically either. But the 300 items are very helpful in terms of being intermediate goods for exports, and I think that's going to be helpful.
In terms of the global events impacting Sri Lanka, as we know, US and Europe are slated to grow slowly, or some of the countries like UK going into recession. Apparel exports to the US has been coming down. Kind of the global sphere is not as conducive or not driving particularly our export sector as a result of that, our recovery as well. And then you have the conflicting Russia and so on, which has been going on for about a year and a half now. So how are you seeing these global tensions impacting us?
Yes, I think it's a very good question because it's very critical that we have these exports, for meeting all these targets that we have promised, particularly for forex and so on. Look, I think the apparel sector has got affected very badly because it's a seasonal thing, right? And there has been a bit of a surplus in the Western world in terms of brands stocking up and not really seeing people consuming. And so I think because orders need to be placed 3 to 6 months ahead, the power sector has first got it right. But at the same time, if interest rates are paused at this rate, inflation comes down, and consumer spending picks up, I personally think that at least export orders will start coming back to us by probably the probably fourth quarter of this year. But global geopolitical situation is very volatile, as you can see, right? Not only the Ukraine crisis is continuing, but also Russia itself is going through a bit of a problem because Russia has an impact on the global oil price, right? So what has happened is while there have been forecasts for slowdowns in the developed and also developing world, it has not really been reflected that much as it should be in terms of energy price. And energy does still, energy is a very important part of our import bundle, and also in terms of costs, it's still a very high component. So I think doesn't look very rosy for the rest of this year. But I'm quite confident that from late this year or early next year, things will improve for the simple reason that I think central banks are almost done with raising interest rates, and so I think that will have an impact on consumption in those markets, and then from there, I think our exports will also get impacted. The only other issue that I really see is that inflation being sticky, which is an issue globally. That is the case, then I think global central banks may have to keep raise rates high, and therefore consumption will come down, and that affects our exports as well. And if the gap between, say Federal Reserve and our interest rates come down dramatically, then I think there could be an impact on the rupee as well. The good news so far is that worker remittances have recovered, and are staying quite stable, and that's also because there is increased confidence in the economy, and also there is a fear that the rupee could appreciate, and therefore sending back what you have as fast as possible gives you more rupee. So I think that also has had an impact. So obviously, overall things are not rosy from a global perspective, but I also think that we are keeping things quite tight in Sri Lanka. So I think we can manage, provided we don't do things dramatically. For example, what I mean by dramatically is letting the rupee either appreciate or depreciate too fast. Right? That's a problem. And even when we bring down interest rates, I think if it can be done, carefully without stoking inflation, I think that is something that needs to be looked at as well. So if we manage our situation carefully, I think we'll be okay. But look, for me, I think the worst for the global economy is kind of coming to an end. But the recovery for growth and inflation to come down will take a little bit more time. So probably end of this year, early to mid next year is where we'll start really looking at rosy things. I think the Sri Lankan economy will start, to be honest with you, recovering by the end of this year for a couple of reasons, including the fact that you start seeing apparel orders come in by the end of the year for delivery next year, right? So that should be interesting as well. And I think tourism is recovering. Of course, we've gone and done, an anti-competitive behavior by having fixed. We're going to, bring back the fixed room rates for hotels in Colombo, and that has an impact. I mean, from a personal perspective, I was looking at coming to Sri Lanka, right, and visiting and doing. A few more trips, and for me, after looking at this fixed rate, it makes more sense to go somewhere else. So I'm sure others will also look at it from that perspective. So I think if we don't do steps that where we don't shoot ourselves in the foot, we should manage reasonably well this year and start recovering next year.
Excellent. Yes, you raised some very valid points in terms of. Particularly what I found interesting was the kind of global interest rates versus Sri Lanka's interest rates. if you are not attractive in that sense as well, I mean, there'll be a flight of capital or capital not coming to Sri Lanka at all, which what was interesting. One last question, Imran, before we wrap up. Are you seeing any kind of opportunities in any kind of global spaces, any industries that Sri Lanka has the potential but has not sufficiently exploited?
Well, it's funny. I am personally against picking industries. To be honest with you, I think if if a country makes its macroeconomic and investing environment good, private entrepreneurs or investors will find the sectors and they will nurture those sectors, right? And I'll give you the best example in the industry I have worked with and I've promoted a lot is the IT BPM industry. I mean, look, it's funny. The government didn't give any support for that industry to take off, and it did, which it did really take off from the early 2000s, and that was because private entrepreneurs decided that they were going to target the international markets first, because Sri Lanka is a very small market, and also because there was not only a qualitative and also qualitative and also quantitative opportunity in terms of being our cost base was lower. But now what's happened with even in that industry is that we've kind of like reached a point where we're not growing as much as we should. One is because talent is migrating, and the second thing is talent is migrating, and the second thing is obviously we haven't got big players in recent years. So I'd say rather than picking industries, I would really focus on very quickly working on a couple of things. Right, number one would be something like a good bankruptcy protection law, which we don't have, which will allow the gradual unwinding of the mess the economy is in, particularly in the private sector. Number two, the rule of law needs to come in. I think democracy and freedom of speech, things like that need to be improved on. Not shooting yourself in the foot, like putting a floor rate for Columbus City hotels. I think if you improve your macro situation as fast as possible, adhering to the IMF agreement, each review that we pass restores confidence in the economy. I have always been a fan that if you do all of that, the private investors, they will find the sectors where we can challenge the world and go very fast in, and they will do that. So I am a bit reluctant to really pick sectors. I would believe we need to work on those things very, very fast. I give a good example is that we're looking at setting up a gambling regulator very fast. Hopefully that will allow something like the Cinnamon Life complex to become have gambling as fast as possible, but also other venues, maybe in the sports city, maybe outside, right? So I think things that we were due for, we've got a Data Protection Act, but we may need cyber protection laws, things like that. Investors look at all of those things, and then once they're in place, they can act very fast if there is so required. So I think those are the things we need to focus on as fast as possible, picking, solving all our macroeconomic and legal structures. Then we're fine.
Fantastic. I mean, that was very insightful, Imran. In terms of picking industries, to get our house in order, and then markets and business will flow from that. Excellent.
Yes, I think that's the way forward. That's the only way forward.
I hear you. Great. Thank you very much, Imran. With that, we wrap up our episode for this week. I'd like to thank my guest, Imran Furkan. Good to talk to you, Imran.
Thanks, Johan. It's been a pleasure.
Thank you. Until next time, have a good day. Bye.